My forecast this year, I didn't think we'd break through 2,300 until late summer, early fall. And then you'd run up and then you get the inevitable pullback. Well, we've already broken through. We've already run up and now we're in the pullback and it's only April. So there's definitely room to extend even higher. Let's just say maybe we can finish the year 2,500. That would be a pretty good year. That'd be 20%, be double what the average has been since the turn of the century. So when silver breaks out, then you're going to get this big, huge surge, to 34, 35, 36 pretty quick, just like what we saw with gold go from 2,100 to 2,300.
Gold experienced modest gains on the spot market on Friday, rising by 0.7% to reach $2,349 per ounce, before releasing a crucial U.S. inflation report. However, despite this uptick, gold is poised to record its first weekly decline in 6 weeks. In parallel, silver exhibited fluctuating movement during early trading hours on Thursday, oscillating between the $27.50 and $27 levels. CraigHemke, from the TF Metals Report, reflects on the recent price movements of gold and silver, highlighting how silver initially lagged behind gold's upward trajectory, but eventually caught up. Hemke emphasizes the historical relationship between gold and silver prices, suggesting that if one believes in the continued rise of gold, silver is likely to follow suit. Silver prices found temporary support near the $27 mark during Thursday's European session, following a notable sell-off the previous week. The white metal garnered some buying interest as the US dollar softened. However, the start of 2024 presents challenges, with silver anticipated to record a substantial deficit in 2023. Despite this, the precious metal could face headwinds amid the U.S. Federal Reserve's commitment to maintaining higher interest rates in the new year. From a technical standpoint, Hemke underscores the significance of silver's $29 price level in recent years. Despite the current pullback, Hemke remains optimistic about gold's potential to extend its rally, projecting a target of $2,400 to $2,500 by year-end, representing a notable increase compared to historical averages. J.P. Morgan chimed in on Thursday, reaffirming gold's structural bull case with a peak target of $2,600 per ounce. The bank maintains a positive long-term outlook for gold, although it acknowledges a shift in favor of the U.S. dollar in the near term. Come along as we explore CraigHemke's valuable insights. Don't miss out on our latest updates. Subscribe to our channel and activate notifications. Thank you for tuning in.
I remember telling people when gold first got above 2,100 and then went to 2,200 and then, started moving to 2,300 and silver was still at like 24. And I've been talking to a few people off the ledge by saying, look, if you believe gold's going higher, which I do and a lot of people do, silver is eventually going to go just by virtue of the gold-silver ratio. Gold's not going to $2,500 an ounce, and silver is going to stay at 25 and have the ratio be at 100 to 1. That might only be 80 to 1, but silver is then going to get, it's going to break out. So silver finally did kind of rush to catch up over the last 3 weeks. Got 29. Talk about charting. I'd invite anybody to pull up a chart of spot silver over the last 3.5 years. Find the times when it has gotten to 29 and notice how quickly it was reversed. In the calendar year, in the summer of 2020 to the summer of 2021, it got up to 29 3 times. The very next day, each time, it got a big, massive red candle and shoved right back down. Just in the last 2 weeks, we've seen that same phenomenon. So there's a little line in the sand it has to cross. So you may need gold to keep going to get it to where that finally happens. And the good news is, when I said about gold and how it got above 2,100, then added 10% and get this rush of excitement because it broke out and made a new all-time high, but most importantly, it broke out of that long range. Silver hasn't done that yet. Silver is still roughly, it's at the top end, up near 28, but it's still kind of in that same range that it's been in now coming up on 4 years. So when silver breaks out, then you're going to get this big, huge surge, to 34, 35, 36 pretty quick, just like what we saw with gold go from 2,100 to 2,300. When that happens, it'll drag the shares along. So again, the good news of all this is it hasn't happened yet. So there's still time for people to kind of position themselves accordingly to profit from it. I mean, you have to start looking at potentially what the next goal would be. There are a lot of technical targets that all kind of line up around 2,650 or 2,700. I mean, even if you just pull up an old logarithmic chart of the price of gold and connect the 1980 high to the 2011 high and just draw a line That's about 2,700 as well. So that's probably the next target. In my forecast this year, I didn't think we'd break through 2,300 until late summer, early fall. And then you'd run up and then you get the inevitable pullback. Well, we've already broken through. We've already run up and now we're in the pullback and it's only April. So there's definitely room to extend even higher. Let's just say maybe we can finish the year 2,500. That would be a pretty good year. That'd be 20%, be double what the average has been since the turn of the centuries.
CraigHemke discusses recent events that have influenced gold prices, citing geopolitical concerns as a critical driver of a safe haven bid for gold futures. Additionally, he notes increased retail speculation in China as another factor contributing to the market dynamics. However, Hemke highlights how margin hikes and profit-taking led to a sharp decline in gold prices after reaching highs above $2,400 per ounce. Amidst global tensions and economic uncertainties, China is a dominant force propelling gold to new heights. With robust demand from consumers, investors, and even the central bank, China's insatiable appetite for gold is reshaping global investment trends and pushing the precious metal to unprecedented levels. Looking ahead, Hemke anticipates that the next catalyst for gold prices could be a slowdown in the U.S. economy, mainly if there are signs of weakness in the labor market. His insights come in light of recent data showing unexpected declines in the number of Americans filing new claims for unemployment benefits. According to the Labor Department, initial claims for state unemployment benefits dropped by 5,000 to a seasonally adjusted 207,000 for the week ending April 20th, indicating tight labor market conditions. This unexpected data point adds another layer of complexity to the ongoing narrative surrounding gold prices and the broader economic outlook. Let's get back to the interview.
Since this breakout happened and we got to 2,300, then a couple of kind of ancillary things have taken place the last few weeks. We had this ramp up of geopolitical concerns and and kind of a safe haven bid that came into the gold futures really around the world because, what's going to happen in the Middle East. And that drove us up over 2,400 twice and kind of painted a little bit of a double top on the chart. You could at least make that case now. It went up there on geopolitical concerns, but nonetheless, the chart's the chart. On top of that, you had this kind of what appears to be a pickup of maybe retail speculation in China. The Shanghai Futures Exchange came in and said, we're going to tamp this down by raising margins and limiting the size of positions that people can take. And that kind of finally took hold and ran into some profit taking back on Sunday and Monday. And that's when we had gold fall or whatever. Once that tumbling momentum happened there, it tumbled into Asia. Then we got onto COMEX and more selling and profit taking came in. COMEX had its own couple of margin hikes. And so all of a sudden, you bought at 2,400, now we're 2,350 and the margins are going up. Just get me out. And then you just get this kind of cascade down for 24. From here in the short term, and we're in this kind of consolidation phase, which is fine. Because like I said, gold never goes up in a straight line. It goes 2 steps forward, 1 step back. We get this rush of speculative money. Everybody buys it until it runs out of momentum, and then it tips over, breaks a moving average, that kind of thing. Speculative money comes back out. You get like a 50% pullback. And then something happens, and you go back up, and you make a new higher high, and then you come back down and make a new higher low, and that's kind of how bull markets and the precious metals play out. And so we're just kind of in that pullback phase at this point. What we might need next is this demonstrable, whatever the right word is, slowdown in the U.S. economy. We've gotten some kind of a little shakier economic data lately. I think the main thing for people to watch, especially in the next week with the next FOMC meeting, is that Chairman Powell has said, inflation is our number one thing, but I'll put that on the back burner if I sense any weakness in the labor market. So we don't want to be too late in cutting. And he said that twice after the last FOMC meeting. So he's going to be out there again next week. He'll probably reiterate that, probably. Then we get another jobs report on Friday the 3rd. If we get some hints then that, wait a second, maybe rate cuts are possible again, because now everybody's starting to think, maybe we're going to get a rate hike. If possible rate cuts come back in the picture, we're already up here at $2,300. That could be the next spark to get us, that next leg higher. So that's what that was a long answer, Charlotte, but hopefully I painted a picture of what people should be watching for.
Considering the unexpected decline in new unemployment benefit claims in the U.S., How might this data point influence your outlook on the future direction of gold prices and the broader economic landscape? Share your perspective in the comments below. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.